right, let's discuss some of the movers in the pre-market, and for that we bring in senior markets correspondent Renita Young. Renita, thanks so much for being here.
Thank you. Absolutely. So we'll talk about Restoration Hardware and DocuSign. First, let's talk about Restoration Hardware because this stock is being heavily impacted by its earnings. Now, while earnings and revenue did beat expectations, it was the third quarter outlook that people are trading on today. It was below expectations, and the company actually had to bring it a notch down since the last time it talked about it. Showed that it will be some pressure on the luxury housing market, which some say have been holding up pretty well considering the macro conditions. And it also showed falling sales in the third quarter on a whole. So adjusted earnings came in at $3.93 a share for RH, with revenue at $800 million. Gross margins 47.5%. The revenue, by the way, was a contraction of more than 18% year over year. Now, the company going forward is expecting third quarter revenue of $740 million to $760 million at the high end. And that drops from the expectation, or actually from a year ago figure of $869 million. And then analysts polled by FactSet, they had actually forecast $778.6 million. So that was below the expectations. And as you can imagine, analysts are giving a flurry of calls this morning. Some of them are mixed, though. Bank of America cut the firm's price target to $415 from $425. They kept a buy rating on the stock, however, and they said that they're reflecting on this macro condition, the macro challenges that will be challenges going forward for the company. Bank of America lowered the price target, or they lowered actually the full year 2023 revenue by 2% and the adjusted earnings per share forecast by 10%. They also cut the 2024 revenue and adjusted earnings forecasts by 4% each. So you can see analysts are definitely heeding to the call of macro challenges and adjusting their expectations on these stocks as well, Caroline.
Yeah, that's right. I'm taking a look at the median price target now, $345. Restoration Hardware, or RH, closed yesterday at $368.55. So analysts scaling back those expectations and think it can, on the whole, go lower from here. It looks like it's poised to open about 8.5% lower right now. Meanwhile, DocuSign could be a winner today. Share is up modestly. What stood out in their earnings, Renita?
Well, DocuSign, different story almost. So came in better than expected on earnings and revenue, but the company actually gave a stronger guidance picture, and that's what investors are applauding today. The fact that it was not bad. It was not a cut, at least. Now, adjusted earnings came in at 72 cents a share on revenue that beat expectations as well. It was $687.7 million. That was growth of 10.5% year over year. Now, the board also authorized a $300 million increase to its repurchase program, and that is making people happy today. Gross margin 78.8% as well, more than 78% as well. Now, a few analysts this morning are also making calls on DocuSign. Bank of America actually lowered the price target to $60 from $72 and kept a neutral rating. They called the results underwhelming, and they say that guidance actually implies lower billings in the second half. But you can't say that the company did not warn against something like this. They acknowledged the macro conditions would be trouble, or at least a challenge going forward. Wells Fargo cut the firm's price target as well to $55 from $60, keeping an equal weight rating, while the analysts called DocuSign's results clean for the second consecutive quarter. They noted that revenue and billings margin, they have an upside as well, but that's a limited upside, and they say continued expansion pressures as this company tries to deal with the macro conditions. Now, Morgan Stanley, on the other hand, called the quarter strong. It raised the price target to $51 a share.
All right, looks like DocuSign could add about 1% if we opened 20 minutes early. Still will be negative year to date, but chipping away at some of those losses today. Renita Young, thanks so much for breaking down those earnings for us.